Good morning from Monaco again. It is Monday, 24 May 2021, and I thought I'd just post a quick update relevant to the recent price of Bitcoin and its recent correction. 10 days ago, as I was working on my second video for this channel, I ended up making a small detour and I made a quick 6-minute report in which I warned about the imminent correction or trend reversal of the price of Bitcoin. As it turned out, that call should now prove relevant to the longer video that I was working on. Its title is Why Trend Following is the Only Valid Answer to the Problem of Uncertainty, and I have just posted it yesterday. So, last Friday, that was 14th May 2021, Bitcoin was trading at just over $50,000, but the day before, on Thursday, it had crashed about 10% on the back of some negative comments about cryptocurrencies that Tesla's Elon Musk had made that day. Anyway, this all attracted a good bit of media coverage, and as I looked at the price chart of Bitcoin, I saw that the great rally it's had over the last few months was showing signs of weakness, which then prompted me to post a short video analysis, and I also posted an article on ZeroHedge. Well, that article got about 7,000 plus reads, and it also got 20-some reader comments. The comments themselves were interesting and, in a way, quite relevant to the whole thing. Not just Bitcoin, but the whole problem of uncertainty and how we cope with it. Unsurprisingly, the comments were for the most part dismissive of my analysis. One reader outright called it hogwash. Another one asked if I looked at the entrails of slaughtered sheep, monkey bones, or tarot cards. One reader wrote, charting. When was the last time that actually worked? Well, I guess we have the answer by now. It worked just then when this reader posted their comment, because Bitcoin did crash shortly afterwards, and by yesterday it was down nearly 40%. Right now it's trading, I think, about $34,000, $35,000, about $16,000 lower than when I published my video. Okay, so then the question is, how was I able to make the call that Bitcoin was due for a correction before it actually happened? Well, I did spell out the exact 3 warning signs that prompted me to present my analysis in the first place. If you haven't seen it, it was all entirely based on the price chart reading, pure and simple. Becoming a good chart analyst may require a bit of experience, but if you review my article or my video, you'll see that it's all perfectly straightforward and that there's nothing complicated to it. It really is not rocket science. But the significance of those reader comments on ZeroHedge is that they underscore yet again the unwarranted knee-jerk dismissal of trend following in general and of chart analysis in particular. I wrote about this recently in my book, Alex Krainer's Trend Following Bible. In fact, the guru of trend following, Michael Covell himself, recently picked up on this and read that relevant passage in his radio podcast just a few weeks ago. So let's hear that. Take it away, Mr. Covell.
But I'm looking at an article that I spotted called The Mindset Barrier. It was on ZeroHedge. I caught it from a link that Jerry Parker posted. Jerry Parker, the original turtle, who's appeared on this show many times. The article was written by a guy named Alex Krainer. I don't know of Alex, but he apparently is a trend-following trader in good standing, at least in his writing that I saw today. Let me quote a few paragraphs from Alex. In spite of the undeniable success of trend following strategies, most investors continue to regard trend following as an oddity, not entirely fit for the ranks of serious market professionals. The reason for this has nothing to do with performance, but is in part simply cultural. Namely, most of today's market professionals were educated in the Cartesian tradition, which validates rigorous scientific method as a way to acquire knowledge. Value is placed on understanding linear cause and effect relationships that allow us to make predictions about stuff. This mindset has an obvious appeal in investment speculation. We expect to predict and profit from market events by understanding how the conditions we observe would cause them. That mindset also gives us the comfort and the sense of competence and control. That's a very well-written paragraph. Very true. Let me continue with Alex. Trend following is a cultural misfit in this intellectual tradition. To begin with, it's based on a field of study called technical analysis, where knowledge accrues through judgment, heuristics, and experience rather than empirical science. Trend following also blurs the relationship between intellectual work and its expected results. The linear thinking investor judges a transaction according to an explicit understanding of how and why that transaction should generate a profit. The trend follower simply implements a set of predefined rules, accepting that any given transaction may produce a loss. A trend follower expects profits, not from any particular transaction, but from a long sequence of trades extending far into the future. Thus, while conventional approaches to investing stem from an understanding of a particular situation, trend following is based on the belief that a certain predefined speculative behavior will deliver positive results over time, regardless of the economic situation, industry, market, or geography. Incidentally, this is another great advantage of trend following. If you learn how to read the charts or formulate high-quality trend following strategies, you'll be able to greatly enhance your universe of opportunities. By understanding trends, you'll be able to trade securities even if you don't know everything about them. Over the last 20 plus years, I've traded in well over 50 different financial and commodities futures markets, and I can confess that I know next to nothing about most of them. I merely believe that they move in trends and that with a disciplined adherence to a well-formulated set of rules, I'll be able to capture profits from such trends as and when they emerge. Yeah, that's very well written.
Incidentally, a heartfelt thank you to Michael Covell and to Jerry Parker for this bit of recognition. Spreading the gospel of trend following usually feels like a very lonely pursuit, so this acknowledgement is quite an encouragement. Anyway, there you have it. Time and again, chart analysis and trend following actually work, not just in theory, but in real life trading. But the knee-jerk reaction from most of the serious market professionals is to dismiss it as unworthy superstition. This month's Bitcoin correction was just one more in the endless succession of examples proving the case. And again, my analysis was very simple and wholly based on reading Bitcoin's price chart. I think it is quite obvious that there was nothing in the economic fundamentals of Bitcoin that could have justified its price crash. Yes, we can weave narratives about Elon Musk saying this or that, but if you pay close attention, you will see that our information universe is chock full of such narratives, both with bullish and with bearish implications, every day of every week of every month, almost 24/7. Indeed, in the days following his dismissive remarks about cryptocurrencies, Elon Musk made a number of supportive statements. Equally, the stories about the Chinese banks and government trying to ban Bitcoin are nothing new either. They were only an umpteenth version of the same stories we had heard again and again and again over the years. Truly, the only approach that can give valid decision support for timing and directional exposure in investment speculation is chart analysis and trend following. And for those who think it is as useless as sheep's entrails or tarot cards, I can only advise them to have a better think about it. Sheep entrails and tarot cards have no connection with markets. Charts, on the other hand, they represent the price discovery process in the markets, and they're driven by the collective psychology of all market participants, as each one of them makes their individual decisions to buy or sell securities. Over time, this process describes the patterns we see in the price charts. And as you gain skill and experience, these patterns will speak to you much louder and clearer than market fundamentals could. They also speak to us in the real time and not just about Bitcoin, but about any and every security market. Last year, the oil price experienced an epic 80% collapse. About this time in 2020, the oil price only began to recover from that event. As an oil market analyst with over 25 years under my belt, I follow that market closely, and I can tell you that I'm not aware of even a single fundamentals analyst who had predicted that event. In fact, at the start of 2019, Reuters had polled fully 1,000 oil market experts to forecast oil prices through 2023, and their predictions were mostly clustered between $65 and $70 per barrel. None of them had predicted the nearly 80% slump. At the same time, I can show you the performance of my trend following model. Based purely on the analysis of price charts and without predicting anything at all, iSystem trend following strategies captured more than $42 per barrel through the oil price crash. And believe me, every chart analyst worth their salt would not have failed to profit from this event with no need to analyze market fundamentals, follow the news media, the narratives or the opinions of the learned industry experts. Many of these players, the masters of the universe, most of whom worship at the altar of market fundamentals, many of them sustained devastating losses. Vitol, one of the world's largest oil traders, allegedly lost $1.6 billion. Vitol denied these allegations, but their CEO did go on television in January last year where he confidently stated that oil would trade between $60 and $70 per barrel in 2020. So whatever kind of analysis he subscribed to, he clearly did not see the crash only weeks before it happened. Ryanair lost $325 million on their fuel hedging positions. Hin Leong, another one of the world's large oil traders, they lost $3.8 billion, and ABN AMRO Bank lost $1.2 billion. The list of these casualties is actually quite long, but one thing I can tell you as a near certainty is that you will not find any trend followers on that list. Anyhow, in light of all that, I thought that it would be definitely worth revisiting the recent Bitcoin experience, as it offered another real-life corroboration for the idea that trend following does not belong in the same category as tarot cards, and that it deserves due consideration as a valid solution to the problem of uncertainty, which again is the key problem facing all investors and traders and hedgers. I also thought I should mention that generally speaking, I am very reluctant to make definitive market calls, and that I may publish analysis of current market events only on exception. Part of the reason is that obviously I can get it wrong, but there's another important reason, namely, every investment consists of two separate decisions. The decision to commit to a trade and the decision to uncommit. In other words, the success of any trade depends on how you get in, but even more so, it depends on how you get out. So even if my analysis turns out to be spot on at any particular point in time, it gives you only half the recipe. With regards to Bitcoin, I called the correction, and it may well be that what we saw was actually a reversal of the previous trend. But every day is a new day, and the price trajectories evolve in ways we can't predict any significant distance into the future. Bitcoin could continue to sell off over the coming months, but just as it has vaulted to $64,000, it could go there again and higher. To provide complete decision support, I would have to track these events continuously and generate some actionable and timely type of analysis with some consistency. Well, beyond covering a small handful of markets, that could be quite overwhelming, and it is precisely for this reason that I have built the ICE system, which in effect does exactly that. It conducts chart analysis and generates consistent quality trading decisions. Unlike me, it never forgets, it never loses focus, and never gets distracted or emotional. This enables me to generate daily trend compass reports which cover some 200 financial and commodities futures markets, reliably, consistently, and effectively. For those of you who are open-minded to trend following and chart analysis, you can sign up to receive Trend Compass reports, which will be free of charge during a 1-month trial. If then you decide that it's not for you, there's no further risk or commitment on your part. It's just a simple test drive. With that, I'll conclude today's report. I will post the link to Trend Compass reports below this video, and in my next reports we will discuss the empirical fact that market trends are far and away the most powerful drivers of investment performance. That contention may also seem a bit controversial, but please bear with me. As you will find out, the case is just about bulletproof, so please consider subscribing to this channel and click on the notification bell so that you'll be alerted when I post that video. Until then, keep well, stay free, and please give this video a thumbs up. See you soon.